In the ever-shifting landscape of global finance, gold and silver have long been revered as safe havens. However, recent market turbulence has seen these precious metals take a hit, with gold prices plummeting by 2% and silver by an even steeper 5%. This sharp decline has left investors reeling and questioning the stability of their investments. What's driving this volatility, and what does it mean for the future of precious metals? Could these fluctuations signal a deeper economic instability or a shift in investor sentiment? The global financial markets have been a roller coaster ride recently, with precious metals experiencing significant volatility. As of 1,139 GMT on Monday, spot gold prices fell by 2% to $23.93 per ounce, while U.S. gold futures dropped by 1.4% to $24.34.10. This decline came amidst a broader market sell-off, reflecting heightened investor anxiety. In the previous week, gold and silver prices soared to new heights. Gold reached a record high, buoyed by hopes of potential Federal Reserve rate cuts and lackluster U.S. job data. Silver mirrored this trend, breaking past $28.50 per troy ounce. However, these gains were short-lived. Weaker than expected job reports and factory order data from the U.S. stoked recession fears, causing both metals to retreat. Adding to the volatility, the Japanese yen strengthened against the U.S. dollar, further unsettling global financial markets. Gold and silver showed remarkable volatility last week, with both metals reaching new highs in the international markets, noted Rahul Kalantri, VP of Commodities at Meta Equities Limited. However, they couldn't maintain these levels due to disappointing U.S. job data and factory orders, which increased recession fears. The resurgence of the Japanese yen against the U.S. dollar also added to the market turbulence. Despite this, the dollar's weakness and escalating tensions in the Middle East provided some support for gold and silver. Gold found support at $2,418, $2,398, and resistance at $2,454, $2,474, while silver had support at $28.10, $27.80, and resistance at $28.64, $28.85. The broader stock markets also faced significant downturns. Japanese shares experienced a dramatic fall, surpassing losses seen during the 1987 Black Monday crash at one point, driven by growing concerns over a potential U.S. recession. This fear prompted investors to offload riskier assets, contributing to the plunge in precious metal prices. On the economic front, data released on Friday revealed a rise in the U.S. unemployment rate to 4.3% in July. This unexpected increase has fueled speculation that the Federal Reserve might cut interest rates by up to 50 basis points in September. Historically, bullion tends to perform well in low interest rate environments, as it is often viewed as a hedge against geopolitical and economic uncertainties. However, current recession fears have dampened the outlook for other precious metals. Gold opened strong on the COMEX, starting near $2,440 and rallying to $2,455, pushing MCX gold to $70,500. However, panic triggered by movements in the Japanese yen and actions by the Bank of Japan led to a sell-off, said Jatin Trivedi, VP Research Analyst Commodity and Currency at LKP Securities. With U.S. interest rates remaining high, gold faced resistance, particularly around $70,500. A potential preemptive interest rate cut by the U.S. could increase buying pressure in gold, given the recent unsupportive economic data from the U.S. The expected price range for gold is between $69,000 and $71,000, with anticipated volatility in the sessions ahead. The turbulence wasn't confined to gold alone. Spot silver fell by 5.7% to $26.92 per ounce. Platinum dropped by 4.1% to $918.35, and palladium decreased by 4.5% to $849.50, marking its lowest point since August 2018. Both platinum and palladium, critical components in automotive exhaust systems for reducing emissions, are under pressure due to the long-term risks associated with the global shift towards net zero emissions. The recent downturn in precious metal prices highlights the intricate and often unpredictable nature of financial markets. Factors ranging from economic data releases and central bank policies to geopolitical tensions and currency fluctuations all play a crucial role in shaping investor sentiment and market outcomes. As the global economy continues to navigate through uncertain times, the question remains, how will these dynamics unfold, and what impact will they have on the safe havens of gold and silver? The financial markets are in a state of flux, with precious metals like gold and silver not immune to the waves of volatility sweeping across global exchanges. The recent declines in their prices underscore the complex interplay of economic data, central bank actions, and investor sentiment. As we look ahead, the big question is, will gold and silver regain their luster as safe havens, or are we witnessing a fundamental shift in market dynamics? Share your thoughts and perspectives on how you see the future of these precious metals in the current economic landscape.